It is 3 minutes past 1 on Wednesday, the 27th of May. It is Hump Day today, and on today's market broadcast, we do have a very special guest who is actually taking time out of his birthday to join us today. It is Tim Price over at the Price Report. Tim, happy birthday, and thank you very much for joining me.
Thank you very much, Boaz. Pleasure to be here.
How are you finding lockdown? How are you finding your first ever birthday in lockdown, for that matter? And what kind of things have you been looking at recently in the news?
It's weird. I mean, it's what I hope will be the first and last most surreal birthday of my life. So I've just sort of been down to the local hostelry to top up my libation supply for later tonight. My rations, indeed, my wartime rations. And my sense is, as we were just briefly discussing before we came on air, my sense is that at least in central London, the lockdown is basically practically evaporating before our eyes. So it's going to be a tricky situation for the government to handle over the next few days and weeks. What this also shows is the extent to which, I used to be a little bit skeptical about the degree to which people would focus on man being a social animal, but I think the lockdown has absolutely proven that in spades. I don't think I speak just for myself and my sort of nascent alcoholic tendencies when I say that everyone wants the pubs to reopen. I think you've expressed a similar emotion recently, haven't you, Boaz?
Yes, quite. And on quite a few occasions, in fact. I think when the pubs reopen, I will be launching my own version of People's QE at the bar, loading up on as much Guinness as I can and various other ales.
Well, Guinness is great. Guinness is basically, it's the Irish who discovered Guinness is basically food stuff. So you can literally live on the stuff.
Yeah, liquid lunch, dinner, and breakfast, for that matter. It isn't like, can you imagine what the lockdown would have been like if we didn't have the internet and the government just said you can't meet anyone? So that's social.
This is true. I mean, you kind of like cometh the hour, cometh the technology. So this has clearly been a boon for the likes of Microsoft, as we know. I don't use Facebook, but I know Facebook has sort of launched apps that enable people to do sort of conferencing and video conferencing and whatnot with friends and family. It would be a completely different animal altogether. If I mean, this is the first internet equipped pandemic, and it's been fascinating to see. What I said before, I really relish the way private industry has stepped up to the plate. So I've sung the praises before of Deliveroo, for example, which I know I've used quite actively over the last couple of months. It just goes to show, and also Tesco, for example, that there was a brief period at the very start of the lockdown crisis when there was runs on the most bizarre things like toilet paper, and all the hand sanitizer flew off the shelves, and there was a real concern that the retailing market was going to just fall over. But I was massively impressed with the speed with which the likes of Tesco, which we use, we've got a local one just half a mile away, with which they sort of stepped up to the plate, implemented the various measures, and stayed open. So the system didn't fall over. And there's an anecdote from do you remember when the levees broke in the States? It feels like it's about 10 years ago now, maybe more.
Yes.
But basically, they said something like, it took FEMA like a week to get water to football stadiums for the people. So, the big government is basically lousy at doing this kind of stuff, whereas private enterprise, if you ever need an advertisement for private enterprise, see how they've behaved over the last 2 months.
Yeah, before we came on air, you were speaking about how this is our pandemic, the first one, and as
people's pandemic.
Yeah, the people's pandemic, indeed, and the first one which we've been internet equipped for and the like. But you're looking forward a little more to trying to imagine what the next pandemic is going to look like.
Yeah, I mean, I'm not like everybody else. I'm not a virologist, or an epidemiologist. So I pass myself off as one on social media. But what concerns me is that there's various levels of blaseness out there in investor psychology and in human psychology at the moment. One of those is manifest in the way that the markets have had this amazing V-shaped recovery, which I suspect is on its last legs, but who knows? Because I think there's a huge, we've only just scratched the surface on the severity of this crisis. So in other words, the full count in terms of jobless, unemployment data, closed businesses. We haven't even seen anything yet. The show's only just started. But the other aspects that give me some concern, and I hope that my concern is overblown. If anyone happened to see it before it was yanked off YouTube, there was what I found a very interesting presentation from, I don't remember his name, Dan. His name was Daniel. I forget his surname now, but he was an emergency doctor in California. And he and a colleague gave a presentation that was on YouTube for a period, about an hour and a half long, just talking their assessment of COVID-19 and what the most efficacious treatments are, et cetera, et cetera. And these are professional doctors. They haven't just fallen out of a tree. And I think 5 million people saw this presentation before it was pulled. And one of the things they said was, lots of cases, but very few deaths. Lots of cases, but very few deaths. So quite an infectious disease, but by no means a fatal one for everybody that gets it. So, with the benefit of hindsight, the panic, has been overblown. We understand. I mean, again, there's something we talked about shortly before we came on air. I think you can say, for what it's worth, that there have undoubtedly been, at a sovereign level, winners and losers. The comparative winners have been the likes of South Korea and Japan, and that's in large part because they've had practice of dealing with things like SARS and MERS in the past, certainly SARS. And so they kind of, and in the case of Japan specifically, I can state from personal experience, having been there, I was there about a year ago, that that for the Japanese, they wear masks as a matter of habit. So it's not new. It's nothing new for hordes of Japanese people to be going out with face masks. So it's part of the culture now. It's endemic. But they've had a very good crisis by comparison with Western countries who have made various differing fists of things. The point I'm trying to get to is, we've had an experience that's been quite well. We've had an experience of a pandemic. The disease itself has not been that serious. My heart goes out to anyone that's been personally affected, that's had the disease, or even worse, lost family members or friends as a result. But this is not a particularly virulent or deadly disease. So my concern is that people are going to get very, if you like, gung-ho about going back to sort of risk-on type behavior once the lockdown finally ends. Firstly, we may see a second and a third wave, depending on a variety of things, including, I guess, the weather. But more to the point, this isn't necessarily going to be the last pandemic that we're faced with. And all I'm saying is that, again, just as we were talking about shortly before we came on air, this is a pussycat by comparison to some of the things that could have hit us. For example, things like, well, I think SARS itself could have been worse, that outbreak, or Ebola, or you don't have to use lots of imagination to think that there could be something a lot more severe coming down the pipe. So it's all very well to say lessons need to be learned, but I think we need to have a grown-up conversation about any number of things. One of which is perhaps the most pressing, is the complete lack of preparedness within our own government, and more to the point, almost like a sort of the whole nature of government is inappropriate for this kind of stuff, because there is nobody in the current cabinet that has any kind of scientific background whatsoever. And you have to say, with the benefit of hindsight, that's a complete disgrace.
Yeah, the response from investors has been very interesting. As you said, sort of a blasé attitude towards the virus now, and most, you see there are all these indicators that generally seeing that investor sentiment is pretty bullish, or at least very optimistic as to what's coming along next. I do wonder.
I think. Sorry to interrupt. I think there's two factors behind that. I think one is people are probably quite fairly looking at the extraordinary level of stimulus, monetary and fiscal, to come. In other words, effectively, pretty much we've gone from 0 to 100 miles per hour when it comes to the deployment, the rollout of modern monetary theory globally. So I think investors are probably right to be, bearing that on the sort of glass half full side of the debate. But in other respects, I think they're being terribly naive in terms of not yet seeing the wood for the trees in terms of the impact on the private sector. It's all very well if you're in government or work for the public sector, because you're basically on a paid holiday for the last 2 months and counting. But if you're in the private sector, there are businesses that may have staff on furlough, but some of those people are not going to have jobs in the fullness of time. They're going to be made redundant fairly soon. There will be no jobs for them to come back to, and there are certain sectors in particular that are just getting completely obliterated. One of which is clearly the sort of the retail sector. One of which is the restaurant sector, theatres. I mean, it's heartbreaking the damage this is going to do, and I think none of that is priced in yet.
Yeah, the damage on the when you've got to the the really direct levels of the economy, especially things like leisure, travel, and of course, as we've already mentioned, pubs. The amount of damage that's actually going to do over in the fullness of time, we've yet to really see. When you said this is not a pandemic that is on that level of lethality that the likes of obviously things like Ebola would be. I find it interesting how the investors' sentiment sort of has treated the Wu flu generally so far, and how it's something that, as we say, it's become quite optimistic. I wonder, what would have how lethal would the virus need to have been before there would have been more fear for investors, considering the huge amount of damage that the lockdown itself is doing?
It's a very good question. I mean, one of the other factors I think behind the strength of the bounce, which I fear is a dead cat bounce, but time will tell, is I think one rationalization of behind this the amazing robustness of equity markets, particularly in the States, is I think one of the drivers for that has been the number of people who would, and I'm not kidding now, would have previously been betting on sports, and because those sporting events have now completely disappeared, they're betting on the market instead. And amongst, I guess, most day traders and retail investors, the prevailing bias is always to basically be naturally long the market. So I do wonder whether that's a real factor. In other words, you've had a temporary spike in the amount of sort of speculative day trading types operating. Yeah. And as and when that cohort slowly goes back to work, assuming they have work to go back to, where that's going to take a bit of fuel out of the rally.
Quite. There was that very interesting chart. Well, there are actually quite a few that are there are a few data visualizations that are trying to capture this sudden influx of new traders entering the market. So it was perfectly timed, I believe. It was in October last year. I think it was TD Ameritrade introduced commission-free trading for a lot of their accounts. At least the States. I'm not sure if it applies here as well. But just in terms of the, as soon as they introduced commission-free trading, the sheer number of trades, it has increased exponentially. It's an incredible sort of power curve that's just gone up. And we had, as last time we actually discussed on one of these market broadcasts, we were discussing Warren Buffett and his decision to sell all of his airlines. And there's that great chart of Robinhood, the American app, which is actually coming to the UK, but it's still mostly in the US. It's one of these unicorn Silicon Valley tech companies, which is trying to bring, as the name would suggest, Robinhood, it's trying to bring sort of wealth to the millennial generation, which doesn't have, it's boomers that have most of the wealth. The Robinhood app is trying to help millennials get in on the stock market with commission-free trading. And, it finances this by selling the order flow through to hedge funds who front run them all. It's all very sort of ironic,
all very whiffy sounding, isn't it?
Yeah, quite. I mean, there's no such thing as a free lunch, and Robinhood is another example of that. But in this context, a few people have commented how Warren Buffett effectively sold his airlines to the millennial generation on Robinhood. So you can see there's the website called robintrack.com, which allows you to see the holdings of stocks by account holders of Robinhood, and the number of accounts holding the airline stocks after Warren Buffett sold them has just gone up to a huge degree. And it's a very interesting example where Buffett's wisdom of buy when others are fearful and sell when others are greedy, effectively, is not being his advice is not being taken by himself, but it is being taken by all of these millennials. And as to who will win out in this, well, we've yet to see. But I did think it was a very sort of interesting concept.
No, you're absolutely right. I mean, I wouldn't want to pick on Buffett. I don't think anybody realistically could. No one can hold a candle to the great man as the most successful capitalist in probably in history. and one of the most successful investors in history. But it is intriguing that he goes off piste whenever he doesn't follow his own advice. So, for example, we know that he lost a ton of money speculating in silver some time ago now, admittedly. And you cite the airlines, and he's not exactly been shy of advocating the extreme wariness when it comes to airline stocks. So I'm baffled as to why he ever found himself in the position of owning them. It's very bizarre.
Yeah, quite. Looking around a bit more broadly, one thing that it's a question I think we've pondered a few times, but I think it's worth dwelling on again is the topic of American exceptionalism, right? So in the US, stocks have bounced very, very high. They've recovered an awful lot of what they lost in March. But if you look elsewhere around the world, if you take the global stock market as a whole, including the US, so you take the MSCI World Index, you can see that stocks have bounced about halfway to where they were before, and that's when you include the US, right?
Yeah.
You look at the FTSE, you look to emerging markets, you can see that stocks just have not bounced as high as they have before. And why do you actually think that is? Because of course there's the tale of American exceptionalism, and it's the dynamism, the entrepreneurial American spirit, yada yada yada.
I mean, those are all valid characteristics. So Americans are an upbeat people, and they've got reason to, because they've had as Buffett keeps saying at his annual conferences, there is an exceptional history of outperformance by America Inc.
Right.
I think the problem, though, is this is a human nature issue. So I don't think American exceptionalism alone can account for it. We are seeing, I mean, I haven't got the chart in front of me, but I think you could find it fairly quickly, because I'm sure plenty of people have done this already, this exercise already. I suspect if you were to overlay a chart of the S&P 500 in 2020 versus the Dow Jones Industrial Average of 1929, 1930, you might start to see some eerie similarities. In other words, human nature, this is one reason why I attach such significance to trend following as part of a diversified portfolio approach, systematic trend following specifically, or momentum strategies if you prefer. The reason I attach such a significance to that is that human nature doesn't change. So I guess all we're really saying is that my argument would be that Warren Buffett, he's obviously in a difficult situation because he's so well followed. He can't speak completely candidly. He has to speak a bit like a central banker so that no one's quite sure exactly what he means. But if Buffett were to say, for example, I think we're in for a generational bear market, then look out below, because the market would just hit an air pocket and would just gap down by, I don't know, 10, 15% perhaps. But a move of that order would be perfectly plausible. So he has to watch his language really carefully. But I think if you read between the lines of the presentation that he made a week or so ago, maybe a fortnight ago, for what the shareholders of Berkshire Hathaway, that's very much his thinking. We are in for a generational bear market. And the fact that I haven't seen the whole thing yet because it's 4 hours long. I've seen about half of it so far. But the fact that he dwells for a good half hour at the start of his speech on the historical example of the American Civil War and then the 1930s Depression suggests to me that that's the kind of mindset he's anticipating for the months and years ahead. In other words, that he is not bullish. And in an environment now, that may or may not be the correct inference from what he said. He may not believe that, but I suspect he does. And other people that I very much rate as sort of Buffett watchers also tend to believe that. If you accept the thesis that the US is about to enter, or is in the early stages of perhaps a generational bear market, or if nothing else, a sideways market, it doesn't even have to go down, it could just go nowhere for 20 years, then you start to appreciate that in such an environment, particularly in an outright bear market, hope can kill, because there's so much wishful thinking going on. The rally is strong, so let's buy into it, and hopefully the worst is past. This may just be the ultimate sort of bull trap setup for the next down leg.
There's the buy the rumor, sell the news mentality has, and as a strategy has worked pretty well, over time, especially with things like, during the trade negotiations with rumors of a deal. And now it seems to be, rumors of a vaccine coming out seems to have taken its place. What do you make of the idea that it's sort of a buy the lockdown and then sell the reopening?
No, I just that again, that strikes me as being dangerously blasé. I'm with James Dellingpole, who we were near term mates at Oxford together. So we both went to the same college within a year or so of each other, and we both read English there. And he's a bit of a shock jock by comparison. So I'm trying to think who he's with now, but he's with one of the sort of alternative media
Breitbart,
players.
isn't it?
Say again, sorry?
He's with Breitbart, isn't
That's
he?
right, Breitbart. He's with Breitbart, that's right. And I know, I follow him on Twitter, and I know that he's suggested that those people hoping for a vaccine are like those Germans in the Second World War who had their hopes pinned on some kind of new wonder weapon that was going to win them the war. And the reality was, it was game over by whenever you want to say 1944 or so, and it was just not going to happen. But there was just a powerful bit of wishful thinking going on. I think the same thing is going to happen. I think we need to discriminate between how we're going to feel about the world when lockdown ends, and it already feels like it's fraying rather seriously anyway, because people are just not as observant as they were a month ago. But so we all want to be out of this mess. Everybody does, or at least those of us in the private sector do. But that doesn't mean that the market's going to be off to the races. So there's going to be, again, we have not scratched the surface of the damage that this has done. And the point is worth reiterating: the damage has been done not by the virus itself, but by the government's response to the virus.
I think we're sort of speaking off the same. Well, I think we're singing off the same hymn sheet here. With the buy the lockdown, sell the reopening. It's just referring to how the market has managed to rally through the lockdown despite all of this damage being done.
Yeah, but I mean the markets are inherently forward-looking, so to that extent it kind of makes sense. But for any stock market to be trading now, given what we know of the economic impact. Given what, and I say that as if it's a certainty, but we know some things are going to be changed forever negatively by this. Given what we know now versus say the market situation in January 2020, how on earth some individual stocks can be close to, at, or above where they were, say tail end of last year is just mind-boggling.
Has the world really improved?
Exactly. So and it was on a fairly high multiple before. So I entirely accept that there's a small handful of businesses that may be in a better position as a result of the pandemic, and the likes of Deliveroo, Ocado, Netflix, Amazon. I get that, but even then, none of those stocks, assuming they were public, were listed, were necessarily cheap to begin with. But I accept that there will be winners, and there'll be certain winners in the healthcare sector, and certain winners in the likes of the Unilevers and the Reckitt Benckises of this world. So I don't dispute that there are going to be comparative winners there, but I can't accept the argument. I just almost refuse to accept the argument rationally that the amount of damage that is going to be incurred by everyone else is just like a rounding error. So we get back to 100%. No, I think we're talking about levels of wealth that haven't yet been destroyed, but are in the process of being whittled down. And that capital is just never going to come back. It's like there are certain types of industries, certain types of businesses, and I sort of alluded maybe to theatres earlier, which is a niche I accept. They're just not going to reopen because the post-lockdown world is going to be so difficult for them to operate in profitably, they might as well just give up now. And I don't think there's sufficient appreciation of just how badly certain businesses are going to be hit by this. So we know the obvious candidates, and we know the obvious victims so far, and they've been in there, things like airlines, the energy sector, retail, hospitality, leisure. The list is kind of a long list. But I mean, I would go further and say I think that the chances of, well, put it this way, I'm not a property guy. I've never been massively interested in properties and asset class, largely, to be fair, because our clients in my asset management business, they tend to have a meaningful allocation of property by way of their primary residence. Now, that's not necessarily an investment, but it should be seen in a round of sort of investable assets ultimately. And it strikes me that the implications for both commercial and residential property everywhere need to be reconsidered. So, I mean, property is a game like anything else. It's all down to sort of location. So it's down to the specifics of the individual situation. But it strikes me that there is no way that commercial property it comes out of this unscathed. I don't. It's probably too early to say. We don't yet know what the impact on psychology is going to be. But for those of us that have been remote working already for years, the lockdown actually has made very little difference. All it's meant is that we haven't been able to go down the pub or to go out for a bite to eat or to meet friends. But for those people who are new to the remote working game, they may well decide, actually, this isn't a bad way of, this is saving me a 2-hour commute every day on a horrible tube train or an overcrowded bus or whatever, or mainline train. I actually quite like this. So I refuse to. I just cannot believe that there aren't going to be profound implications potentially for commercial property and also for residential. So I mean, I live in pretty central London, and at least a while back, this was sort of the epicenter of the pandemic as far as the UK was concerned. I suspect that given the relatively rarefied nature of central London property and premium London property, people will say, actually, well, okay, what's the choice here? I can spend 2 million quid on a tiny little flat, or I can spend half of that money and get myself a mansion, some miles out of London. And given that all that this pandemic has done to accelerate the trend of online, remote, virtual working, I think the implications for property are profound, and there will be some winners in out of favor sectors, but I think there's going to be some huge losers. So this pandemic potentially changes all kinds of different levels of investment.
Oh yeah, certainly. I think what I was referring to with the concept of buy the lockdown and then sell the reopening was simply that, as it seems like, as you say, markets are forward looking, and there's a great deal of hope that has been placed in the stock market and the possibilities of an optimistic reopening. But I was just wondering if that dynamic is going to play out, where the promise of something good in the future is rumored, enters the market, there's buying as a result, and then when it is actually realized, i.e. when we actually reopen, whether or not that's when there's actually going to be a big sell-off. So when there is the economic reopening and people actually begin to realize the depths of the damage that is done to, as we say, the likes of pubs, leisure businesses, and the likes, and the property market, whether or not it's when we actually reopen, everyone says, okay, everything's supposed to be fine now. When people venture out again, that's when the stock market is going to really take a dive.
Yeah, I mean, I also don't think that the likely direction of travel for taxes, both corporate and private and income related, is yet priced in either. So, so you've got this weird dynamic, haven't you? Because on the one hand, you've got stimulus till the cows come home, sort of uber QE, a mega QE, MMT, if you like. And that's clearly been responsible for some of the lift in animal spirits in the stock market over the last month or so. But on the other hand, you've got, so one thing we can say with absolute certainty is that austerity, if it ever really existed, is absolutely dead now. So it's now welcome back big government and big state. There will be implications to that. And one of them is that we're all going to be paying a ton more tax. All things equal, does everybody paying, or those people that have jobs and savings and assets, does everyone paying a ton more tax? Is that being priced in yet? I don't think so.
Yeah, and in places like in the States, where vast amounts of government revenue, of tax revenue, is actually sourced from capital gains from the stock market. It's sort of a government imperative to try and make the stock market go higher, simply because so much of the tax take comes from it. I suppose what may be done instead of taxation, because obviously taxation is politically unpopular, just to try and blow out the deficit again, now that central banks are embarking on more quantitative easing. But ultimately, this is it's just an ever more indebted game, I suppose.
So the way and I probably said this before, the way I would look at this is, the way we were positioned, for example, within my business, within the price report newsletter, in terms of asset allocation and underlying investments, we were positioned coming into 2020 with the realization that something was rotten in the state of Denmark, but we were expecting the pin to burst the bubble would arise out of the financial system or the financial sector. Like probably everybody else on the planet, we had no idea it was actually going to be a virus coming out of China that did it. But all that's effectively happened is, I say all as an understatement, what's effectively happened is that the COVID crisis has acted like some kind of weird time machine, and it's accelerated us and government finances and government debt loads like 2, 3, 4, 5 years into the future, almost overnight. So, again, given these two monstrous sort of tectonic plate shifts, on the one hand, you've got stimulus, monetary and fiscal, and on the other, you've got the deflationary drama of everything associated with the lockdown. It is too early to say which of those forces is going to be ultimately triumphant, but I was already expecting the inflationary outcome to be the ultimate end game, if you like, of this stage of whatever we're going through. I'm even more certain of that now. So, if nothing else, my advice to anybody would be take a look at your investment portfolio, and then have a calm, considered discussion in your own mind with relation to how much inflation protection do you think would be appropriate now? And I think the answer is, for everybody, probably more than you currently have.
Tim, I won't take much more of your birthday up, but before we go, do you have any closing comments you'd like to share with our listeners?
Well, other than let's be careful out there. Just try not to let the emotional side of things get the upper hand. This is, if there were ever a time for cool heads, this is it. So I'm not suggesting, I'm not necessarily bearish, because I'm very bullish on the small sector of the market that I think it has real legs, and that market, that part of the market for me is basically, this is not going to come as any surprise to anybody. It's going to be defensive value businesses, in other words, quality businesses run by principled, shareholder-friendly management with an exceptional record of capital allocation and stock market success. And the ones that I'd single out would be those companies in the mining sector that are operating in the right kind of countries, those countries being the likes of Canada and Australia and Western Australia, where the rule of law still pertains, where you're basically looking at, say, gold and silver miners, including royalty and streaming companies, where the companies aren't particularly expensive in stock market terms, and they have little or no debt. I cannot own enough of those kind of companies, because I am more convinced than ever that the end game is going to be an inflationary one. Governments have doubled down on the debt load. They've doubled down on debt issuance. Whether or not taxes go up, bond issuance is undoubtedly going to have to. We have all the makings of, if not an inflationary crisis further down the line, certainly a stagflationary crisis, perhaps. Either way, I think everybody did, as a sign off, it would be however much inflation hedging you need, you probably need more.
Tim, thanks again for taking the time out to join me today.
My pleasure, and I hope at some point we can meet up in the real world after all this, and sink a Guinness or two.
Oh, indeed. And I think I speak on behalf of all our listeners and wishing you a very happy birthday.
Thank you very much indeed. I appreciate it.
That was Tim Price over at The Price Report. That is all for today, but we shall be back again tomorrow. If you do want to follow Tim on Twitter, he is very active on there. I believe it is at Tim F. Price is his handle. And you also follow me at Federal XS. That is all for today, and we shall be back again tomorrow.